This is the wrap-up for the live market open for January 27th. It's Wednesday and it's Fed day. Before we talk about the Fed, let's see what we had yesterday. Nothing new from Mark Carney of the Bank of England. Good figures from the United States, mostly. HPI, the Case-Shiller Home Price Index rose more than expected. Consumer confidence rose more than expected. And only markets flash services PMI disappointed. Also in Australia, we had good news from the CPI. Rising more than expected, basically eliminating a chance of rate cut next week from Australia. And we had, in general, the most important thing is the mood. Okay, the mood is positive, more positive than negative. Yesterday in the morning, we had a negative mood because of the crash in Chinese stocks, but then things improved. Oil prices were on the rise, also oil related, but also the mood improved in stocks. And we've seen commodity currencies strengthen. So it's the Aussie here rising on better CPI and a better mood. 70, 65, 71, 50 are resistance lines. 70, 69, 50, and 68, 30 are support lines. The Kiwi awaiting great decision in New Zealand and in the US under 65, 65.80 resistance, 64.25 support. Rising to the top, very narrow range in euro-dollar. During this session, during the last hour, during the show, it's a bit lower, but very much stuck in range. Awaiting the Fed, 107.80 support, 109 resistance, followed by 110, 110.70 on the downside, 107.80, 107.10. The other safe haven, the dollar yen, is a bit higher than yesterday, 118.26, but not as high as it was earlier in the week when the mood was much better. Or sorry, earlier or on Friday. Still uncertainties about BOJ action. Okay, pound dollar in the higher end of the recent range, 143.33 at the moment, 143.60, I would say 70 is resistance. Support, significant support at 140.125 and 140.50. Okay, dollar CAD. Moving with oil prices, 141.22. It went to lower lows yesterday on this rally. In oil prices, 140.87. No, 140.50 I would say is support. 141.70 is resistance. And 144.40 is strong resistance. Okay, so we talked about the major currencies. And now let's talk about the events for today. There's one event that looms over all the rest. It's, of course, the Fed, but before that, we have BBA mortgage approvals in the UK. New home sales probably be ignored despite its importance. Crude oil inventories is significant for the Canadian dollar. They're expected to rise a lot. And then at 7 GMT, the Fed decision. Let's run again on the main scenarios for the Fed. The Fed is not expected to raise rates or move at all, but we're expecting some kind of hint about what's going on in March. The Fed will try to keep things as balanced as possible, not say anything. Keep all the options open. They probably will acknowledge some weakness in markets and some weakness in the US economy, but some things in the US economy are doing better. The Fed's mandates, jobs, and inflation. If the Fed go dovish, there are two separate dovish scenarios. One is that it's sensitive about markets, about the US dollar, about China. Sort of waiting for a calmer environment until the next hike. That will be positive for stock markets, positive for oil, positive for commodity currencies and the pound, Aussie dollar, Aussie, Kiwi, CAD, and the pound, and negative for safe haven currencies, the euro and the yen, because it tells us that everything is okay with the US economy, and they're only worried about markets and everything is cool. But if they're dovish because of the US economy, because of falls in manufacturing, retail sales, and they have the GDP figures, and they're probably going to be not so good in front of their eyes, then we have a different scenario. Then the US economy cannot lead the world forward. A resumption of the risk-off atmosphere, risk aversion, stronger euro, stronger yen, weaker commodity currencies, weaker pound. Okay, these are the main scenarios. An extreme scenario would be that they're hawkish and hinting about a rate hike in March. Very improbable. If this happens, a stronger dollar across the board. And also a scenario with, well, I would say still with probabilities, is that they do their best to find a balance. That means markets will be stable for an hour or 2 hours until analysts try to understand what the Fed tried to say or decide what the Fed said. I mean, and also they eventually, I believe, this will turn into a resumption of the risk-off atmosphere, stronger yen, stronger euro, weaker all the rest. A few things to remember: initial reaction at the release at 7 GMT, then at the Tokyo start, then the full reaction in the European session. Other things to watch out for: voting members. It's the first decision in 2016. We have new voting members on the Fed. So we might have dissenters, perhaps to the hawkish side. The composition is a bit more hawkish. Yellen still has the last word, and her number 2 and number 3 are more dovish. But this could also be a factor, the dissenters, okay? Small factor. And another factor, just analysts to watch out for: first and foremost, John Hilsenrath of the Wall Street Journal. Second in line, Steve Beckner of MNI. But of course, things that people say on Bloomberg TV and CNBC everywhere will also have an impact. Why did analysts have a bigger impact? Because the Fed makes blurry messages. Okay. Hopefully we'll get something a bit more clear from the Fed, and we can understand markets more easily, but the Fed does not want that. It wants to leave all the doors open. Okay, and now after the Fed, we have the RBNZ decision. No cut is expected, but they could go dovish because of recent weakness in inflation figures, hinting that they could cut rates later in the year. And we have also trade balance from New Zealand and Japanese retail sales to close the day. This is the Fed decision is the most important event, but it's not the end of this busy week. We also have more important figures tomorrow and a strong finish on Friday. Okay, so that's it for today. Thank you very much, everybody. Thank you very much, Sirik. I see you speak some Hebrew. Toda rabba chaver, which means thank you very much, my friend. Yeah, I'll also remind you that the voting on FX Street's Best Awards 2016 continues. Forex Crunch is nominated. I will thank you if you vote for me or participate in general, and even not vote for me, because there are really great nominees out there. Voting ends by the end of the week, before the end of the week. So do participate and check out the nominees pages. Okay, so that's it for today. Thank you very much, everybody, for coming. Sorry for the technical issues. I thought we would have a better technical day because I have a new lamp here. But anyway, hopefully everything will be smooth as it usually is tomorrow. Oh, thank you very much for voting for me. And thank you very much, everybody, for coming to the show every morning. Looking forward to your questions tomorrow as well. So I wish everybody a safe and successful trading day, and see you tomorrow. Thank you, and bye-bye.